Welcome back everyone. Today in this video we are gonna discuss about top 4 stocks that you can buy under $10. That is near about the price of a Starbucks coffee. Okay, with that let's start this video. So the first stock in this list is Ovid Therapeutics. It would be almost impossible to talk about promising cheap stock to buy without mentioning at least one biotech name. That's because this high risk, high reward companies perfectly underline both the pros and cons of this type of investing. Just as a biotech company could bring in 100% return and it would crash and burn with negative trial results. Okay, with that let's analyze this stock, Ovid Therapeutics. Looking at the cheap biotech stock, Ovid Therapeutics looks to be a strong buy for a reason, highlighting its bold medicine approach that focuses on transforming the lives of its patients. Ovid seems to take a more moralistic approach to biopharma. The company specializes in developing treatment for rare neurological disorders and has a robust pipeline of 4 candidates. The company continues to have a positive update on OV935, which is in co-development with Takeda Pharmaceuticals. According to Ovid management, in a current trial, the therapy has found to reduce seizure frequency in the difficult to treat patient population. That is a huge advantage. While none of the company's drugs are on the market yet, clinical trial results are worthy for optimism. As long as these trials continue to do well, Ovid Therapeutics should be safely on its way to reach a price of $20 target in near about 1 month. Also, if it takes a little bit time, within a period of 6 months, this target would surely be achieved. That's the target we want to imply with almost 500% upside from its current price, nearly trading around $3 to $4. Okay, so always remember, whenever you pick a biotech firm, read about its current research work. That is the most important thing, okay, in any biotech firm, because the better their results are in research field, the more money they would generate. Okay, with that let's move into our next stock. The next stock is a common name, that is Angies Home Services. Shares of Angies Home Services stock began trading in October 2017 following the merger with Angies List and Home Advisor. Angies encompasses those brands as well as brands like Handy, Craft Jack and Home Stars. Although it is not exactly breaking news that e-commerce led, of course, something like Amazon, which is disrupting everything, it is still important to note that the trend weighed on the home services market, but Angies Home Services is seriously making a sure impact and a comeback fighting against this. To be fair, in this age of novel coronavirus, it's hard to evaluate a company without reflecting on the outbreak. Before the pandemic, a quick trip to Angies List website matched you with air duct cleaning, floor repair or holiday decorating specialist. This streamlined home services process is exactly what was boosting Angies stock. But now Angies Home Services is feeling the heat of this epidemic. Before the burnt of the pandemic hit, the company reported its 4th quarter earning, which was seen that the revenue was up to 50% year over year, but operating income was down to 6.2 billion. At that time, the CEO of Angies, Brandon Ridenour, was confident Angies was still on to hit a 20 to 25 long-term growth rate. The company's new fixed price business, which gives customer set price for certain services, was said to be serious tailwind, and it is disrupting all the competitors in the market. As this new model expands and the pandemic's effect is decreasing day by day, Angies Home Services should increase its profit with a share price just under $6. A 12-month target you can set about $12 to $13, where it is more than 100% return in a year, which looks very bright, whereas S&P 500 gives you 7 to 8 to 12% for this year. Okay, so that's the thing. With that, let's move on to our next stock. It is Smith Micro Software. Up until the very last day of April, Smith Micro Software Incorporated prices were soaring and overall 27% higher than month before. Then the short took over and the stock fell almost a full dollar to $4.49. I continue to like Smith Micro stocks a lot and believe that the drop will be temporary, reserve itself over the month of May. In my opinion, this is a great entry point for any investor, whether it is a beginner or an experienced one, to invest in this application software firm. With that said, let's move to the next stock, that is AMRS Incorporated. If the Peter Leeds newspaper can be said to have a collection of greatest hits, my team hot list pick AMRS Incorporated, a biotech and especially chemical firm, would no doubt be listed among those names. Okay, around 1 year after the first being featured as a hot list pick back in 2017, also that in end of 2017, AMRS stock ultimately climbed approximately of 285% from its $2.35 starting to 9 levels. That is a huge growth, my friend. Now, as of the time I was composing this video, AMRS is down all the way back to $2.83, close where it is already discovered when I first discovered the stock. Okay, as I have a strong suspicion that it will make the same journey northward as it did in 2017 and 2018. And I believe this stock will rise up to 285% or more even this year, and it's currently trading at such a low price that if you buy hundreds of this stock, it would be a huge change in your economy and it would also make you financially strong. You can take this stock for a long time period because of the working model that company has. Okay, with that, let's move on to our next stock, that is SOVO Incorporated. If you are a clean dean or a senior level academic administrator, look to get your university or college to run in a tight ship, you might count SOVO Incorporated. It helps to make things more efficient. For example, instead of having to pay graduate student to administer an exam, student take the online test using SOVO software. SOVO also offer educational and training services to corporate employers. That is a huge benefit. If a company is targeting both the student and the corporate sector, it is a great company for investment. Think coding boot camps or industry specific educational workshop or any other learning skill that your employees need. SOVO has got that for you. SOVO has been promising a double-digit revenue growth and a low double-digit EBIT data over next 3 years. Management also claimed that it is one of the only few firms addressing the potential of 33 billion market, along which 21 billion is captured by SOVO. SOVO has been appealing number at its disposal, including zero debt to equity levels, a forward P ratio of 3.73%, a PS ratio of 0.6, PB ratio of 0.63, and there are many such data which you can read and you will find this is one of the amazing stock, and I think it is my favorite stock to pick in this list also. With that, it's the end of the video and we will meet in next video. Till then, take care, analyze this stock and invest in them quickly. Also, it is a great disclaimer, I have forgot to say it in before, I am not a financial expert, so always make decisions based on your analysis, no matter how much lucrative my video looks. Okay? Also, if you are free and if you find this video helpful, please smash that like button and subscribe to my channel. I bring such amazing videos for you and help you in taking better financial decisions. Thank you.